welcome to another live technical analysis. We're going to be starting off as usual with the euro against the US dollar. So, from a technical point of view, we could have placed a sideways moving channel, which would have been incepted on the 24th of April. So, one channel could have been this one here, taking this bearish candle's wick, validated after, I'd say, in the same session or the next day with this bullish candle here. So this could have been one. We could have also drawn an upwards moving channel, which was this upwards moving trend line here. So it could have coincided somewhat like this. And then you could have taken this old high and then extended it. So we had two scenarios playing out yesterday. One, either a continuation of a bullish outlook with the upwards moving trend line, or a sideways moving bias with the sideways moving channel. It broke down below, but now appears to have re-entered our sideways moving channel, with the lower band of the upwards moving channel acting as some sort of resistance. Now, I would attribute the euro strengthening, the loonie strengthening as well in cable from the market perception of a slightly dovish Fed. So the Fed's interest rate decision yesterday, the bank maintained interest rates steady as was widely anticipated. In the bank's accompanying statement, there were some concerns about the US's economic outlook in the future, and they're also worried about progress on inflation, potentially not being as much as they had wanted. Following the bank's accompanying statement, we had the press conference by Fed Chair Powell. Now, Fed Chair Powell is still playing the scenario for a potential rate cut by the Fed this year. But what was more concerning for me was the fact that we had to refer that it is not likely that the bank's next action will be a rate hike, essentially downplaying the scenario for a rate hike in the bank's next meeting. The fact that we have gone from talking predominantly for interest rate cuts or holding rates to actually discussing the possibility of a rate hike for me is in itself a hawkish sentiment and rhetoric emerging from Fed Chair Powell. Now, the markets appear to have widely ignored that and predominantly have taken Fed Chair Powell's, I'd say, press conference as slightly dovish in nature, which might be why the euro and the dollar's counterparts have been strengthening. So it's moving, I'd say, now in a sideways bias. The Bollinger Bands have narrowed between R1 and S1, so 1.068. We could have placed S1 at this low, but the fact that it's back into our sideways moving channel means I would ignore temporarily this low and instead opt to maintain my S1 at 1.0680 based on the historical data and the references that we have had. So keeping S1, S2, and S3 the same. Same with R1, R2, and R3. It's moving sideways between 1.068 1.074. Further supporting our sideways bias is the narrowing of the Bollinger Bands. The 50 and 100 moving average is smoothing out, implying low market volatility. In addition to their RSI indicator below our chart, reading a figure of 53, so implying a relatively neutral market sentiment. This could all change after tomorrow's US employment data, in which we might see the dollar strengthening or the euro weakening, or vice versa. We're also noting the US factory orders rate, which are expected to potentially provide some support for the US dollar. USD JPY. Now, this is a very interesting story. So you can see we have R1, R2, and R3. S1 could be brought slightly lower, coinciding with the opening of this bullish candle. So this appears to have been the Japanese government's intervention on Monday. So this was number one. Yesterday it reached back to those levels, and this is hypothetically another intervention by the Japanese government. I'm saying hypothetically because it has not been confirmed just yet. But personally, I think that the government did intervene in favor and in support of the JPY. So this is a daily chart. If you move on to a 4-hour chart, it's a bit more evident. As you can see, I would bring my R1 lower to this high, 156.30. So this is where I place my R1. So we have R1, R2, R3. Then we have our numerous support levels. Just clean this up slightly. 52.70. So our support levels are going to stay the same except S1, which needs to be slightly readjusted. So we're now on the 4-hour time frame. If you look at the technicals, I would maintain a bearish outlook for the USD JPY due to the fact that we have allegedly seen another government intervention. So it appears that they're not allowing the pair to move higher between 158 and 160. So this range between 158 and 160 appears to be a level upon which the Japanese government will not let the yen fall back to. So this is the last line of support, or so it seems. As we've said, it has not been confirmed just yet. So S1 154.50. Let's just edit that 154.50. I'd maintain a bearish outlook for the pair as we are now seeing a willingness. Well, we are hypothetically seeing a willingness by the Japanese government to intervene in support of the JPY. The BOJ's monetary policy meeting minutes were released earlier on today, in which we saw a BOJ policymaker making the case for further rate hikes by the BOJ. Now, if that does occur, it could provide some support for the JPY, and should that hawkish rhetoric be echoed from other BOJ policymakers, could further support the JPY. 158.30, 160.20, which was the intervention on Monday. So have S1, S2, up until S5. Then we have R1, R2, and R3. For resistance, I'm taking this recent high. As you can see, we are assuming this was an intervention, came back up, so it found resistance at this point, shown by the wick. So the bears took over, pushing the pair lower. I would maintain a bearish outlook for the pair as long as it manages to break below S1. If it does not, we could maintain a sideways bias, but I think it's either a bearish or a bullish outlook, one or the other. Breaks below S1, bearish outlook down until S2, breaks above R1, bullish outlook, potential target being R2. But if it does break above R1, I would not be surprised to see another or a potential intervention by the Japanese government in favor of the JPY. If you look at the loonie, USD CAD, we're seeing the dollar is losing ground against the Canadian dollar. It came back up to R2 that we had placed quite some while ago. So this was actually a resistance level. Coming back down, it's broken below support, resistance turned support, now turned back to resistance. So I have S1, S2, S3. Support and resistance levels remain the same. Maintaining, I'd say perhaps you could maintain a relatively sideways bias. I wouldn't be that bearish. I think it might come down to S1 potentially, staying between S1 and R1. Note the RSI is at 50, so the bears are not in complete control of the pair just yet. Onto cable. Now, it's still validating this downwards moving trend line that we had placed during our last live technical analysis together. Note it's validating R1, 1.2560 that we had placed together, which is why it's nice placing these on your own chart, seeing if they're valid, if they provide some insight, perhaps another opinion. So retracement, so this is a higher low, a lower low, higher low, bearish outlook for the pair. Bollinger Bands appear to be tilted towards the downside. RSI is at 50 units, it's not at 60 or 70, implying that there might be a bullish sentiment. I would still be bearish for cable as long as it validates the downwards moving trend line and breaks below S1 in the near future. For now, bearish. Target is S1, lower than that is S2, 1.2180. S3 1.2035. Now, if it does manage to break above R1 and this downwards moving trend line, perhaps then we might look for a bullish outlook if it manages to break above R2. If it does break above the upwards moving trend line and R1, which would be coinciding with both, then we might make the case for a sideways bias between R1 and R2. Onto the Aussie, finding support on our old support level at 0.6510. So valid support levels, as you can see. It's not that bullish. If it manages to break above this lower high, then I'd maintain a relatively sideways bias between S1 and R1. If it doesn't, bearish outlook if it manages to break below S2, as it is on S1 currently. It's broken below our upwards moving trend line, so it might be implying a potential shift from a bullish to a more neutral slash bearish outlook. Onto oil, broken below S1, S2, taking aim for S3. So we're now switching for a bearish outlook for oil. This becomes resistance, R1, R2. And let's remove this. So S2 becomes S1 and so forth. We need a new S3 level. So for S3, I would be looking at historical data. One could say around this level might be sufficient. You have two wicks touching on, then you have these two candles. Finding resistance, managed to break above 73.88 will could be our next support level, or playing a bit more safe, taking these wicks, we wick down 73.65, a bit more optimal, I'd say, based on this wick coming back down, seeing accumulation. So S3, 73.65. Excuse me, actually S3 becomes S1, 78.20. 75.90 becomes S2. 73.65 becomes S3. 73.65. 80.17 becomes R1. Old R1 now becomes R3. So we would maintain a bearish outlook for oil prices based on the fact that they've broken below our two support levels. So S1 and S2. RSI still at near 30, so it's at 35. So bearish market sentiment appearing to have remained within the oil market. 80.17 for R1. Easing tensions in the Middle East, so a potential ceasefire agreement between Hamas and Israel could be alleviating concerns about geopolitical tensions in the region rising once again. As such, could be weighing on oil prices. 80.17, S1, S2, bearish outlook, downwards moving trend line from this old high, still validated. Bollinger Bands moving averages also tilting towards the downside, further imply that the bears may be in control of oil prices in terms of WTI cash. Onto gold, bouncing off S1, slight readjustment for our support level and resistance. 2,285, that's for S1. So about $5 lower than what we had placed our initial support level. For resistance, we could drop down our one to this old high, 2,350. 2,350 will now be our resistance level for our one. R2, 2,430. Now we could also say that this could be moving in a sideways fashion, but I'd like to see the price action bounce off S1 and then perhaps seeing another validation of R1 at 2,350 before I place that sideways moving channel. Personally, might be bearish if we're anticipating the dollar to strengthen tomorrow or later on today. It could weigh on oil. Easing tensions as well in terms of geopolitics could also weigh on oil prices in terms of safe haven outflows. For now, our size still it's at 43, so some bearish tendencies. So for a bearish outlook to occur, has to break below S1 of 2,285. Then we could maintain our bearish outlook. If it bounces off sideways, breaks above R1, then bullish. Looking at the S&P 500, slight readjustment for R1, 5,116. Bounce off the mid-range. The Bollinger Bands do appear to be tilted towards the downside, so there are some bearish tendencies. let's say sideways between S1 and R1. If it doesn't break above R1, this could be a lower high, and if it does break below S1, could be a new lower low. So that would be bearish. But if it doesn't break below S1, sideways bias between S1 and R1, I would not be bullish just yet. I'd like to see a few more days of data before I decide on either a bearish or a bearish outlook, bullish or bearish, excuse me. Nasdaq 100, nice recovery. Could be a lower high once again or a higher low. If it manages to break above R1, this would be a higher low, would be bullish for the index. But same case with the S&P 500. Some bearish tendencies appear to have remained within the two indexes. We've done CAD, we've done cable, JPY, Aussie, we've done the Aussie. Apple still keeping S1 and R1. Crossover of the moving averages might imply signals, but they're crossing over frequently. I wouldn't be bearish or bullish or bearish just yet. I'd like to see the company's earnings. Netflix bouncing off nicely off S1, 543.35. Wouldn't be bearish just yet. Smoothing out might imply sideways bias between S1 and R1. Onto Tesla. So, following Elon Musk's surprise visit to China and the announcement with Baidu, which could allow Tesla to sell quote unquote smart vehicles in China, which is a regulatory requirement, providing some support for the company's stock price. So this may have been breakaway continuation, but we're not seeing an exhaustion gap, which is a bit concerning. I would be bearish down until S1. Then we might see a continuation of its upwards motion up until R1, 204.85. So I would not be surprised to see the stock price move down to S1 first. RSI is at 60, so there are some bullish tendencies still for the company stock price. On to IBM, breaking below S1 is to S3, bearish outlook for the company. ExxonMobil breaking down below, potential resistance turn to support, slightly bearish, but let's go to the daily. Being lower, 113.55, that would be my S1. Dollar gaining on the 4 hour from the day, relatively unchanged, gained slightly yesterday. If there's something you'd like us to see in particular, you can ask and then we'll have a look. Google 163. I wouldn't be that bullish on Google. It's a bit interesting. Is there anything else we'd like to see? Intel breaking below S1, S2, now taking aim for S3. 29.78, slightly bearish. JP Morgan finding a ceiling at 194.40. Might be retracing lower to S1 of 187.50, which was our old S2. Note how nicely our support and resistance levels are being validated. Regardless of this being support, it has now turned to resistance. So support and resistance levels that we appear to be placing seem to be correct. Kiwi, UBS, Petroleum, USD Norwegian Krona. We could do the USD CZK. Let's see. Let's see, what is it? We have an interest rate decision later on today, which is why I'm trying to find the particular pair. There we go. Chart window, templates. We're doing USD CZK. Interest rate decision today. Two scenarios based on market participants. One is either both are actually a cut. So no case for a hike yet in terms of the OIS. From a technical point of view, we're seeing support at around 23.35. So this is dollar CZK. We could place resistance at this lower high, 23.57. That's our one, let's say. Our two around 23.75. And then our three, we could actually bring this lower. Taking this here and then playing a bit more. 23.8. But then the distance between S1 and R1 is simply too much. Instead, we need to give it some space. And these might actually be resistance levels, but if I'm placing S1 and then I'm placing R1 here, and then I'm placing R2 and R3, it's inconsistent. Let's look at this from a more macro perspective. All time, 23.75, and then this high here, 23.87. Support. So this could be, now this is S2, and then S3. So we can have S1, S2, and S3. Technical sideways between S1 and R1, smoothing of the moving averages as well. Let's place our support and resistance levels on text labels so that they're easier for you to see at home. 23.58. If they're hawkish in terms of their accompanying statement, we might see support for the CZK potentially breaking below S1, taking aim for S2. Dovish, then we might see the dollar gaining the initiative, breaking above R1, taking aim for R2. So 23.75, that's R2, and then R3, 23.87. Swan is at 23.36. $23.21. Then we have 23.05 for S3. So S1, S2, S3. Technicals look to be for a sideways bias between S1 and R1. Sideways moving channel formed earlier around, let's say, here. And then validated at this point here. So you have two touches and then two here. So sideways between S1 and R1. RSI 50, neutral market sentiment up until the decision by the central bank. What else? Apple could readjust actually S1 slightly lower, 165.05. Let's see indicators. Bollinger Bands, yes. Narrowing, so smoothing out, low market volatility, trend, MACD. Still relatively bearish, but still. See something else as well. Fibonacci retracement. Not yet. I could take on fan. Let's see channels, indicators, ATR, momentum. You could see it volume. Volume is picking up. So sideways wouldn't be bearish for Apple stock price just yet. Nvidia. Nvidia, you've got the Bollinger Band tilted towards the downside. RSI is at 50, so it's a slight neutral market sentiment yet. So we were off by we had support at 833.70. It actually appears that support was at 830.47, so we weren't that far off. I'm going to be keeping R1 955. We could bring that lower. For Nvidia, one of their suppliers announced earlier on today that they're sold out up until 2025, which might be a good sign for demand. So I wouldn't be that bearish for the company from a more macro perspective. For now, let's say that it's resting on S1. Bearish outlook would have to break below S2 as well. If it opens higher, then we would maintain a sideways bias between S1 and R1. If it breaks below this particular bullish candle, then we might actually see it breaking below S2 as well. Breaks below S2, taking it for S3, breaks above R1, then we would maintain a bullish outlook. And with that, that does it for today. Thank you for watching.
Just go ahead and get started now. So first things first, as per usual, a disclaimer. So products are traded on margin and carry a high level of risk, and it is possible to lose all your capital. These products may not be suitable for everyone, and you should ensure that you understand the risk involved. A disclaimer, the information in this webinar should not be considered investment advice or an investment recommendation, but instead educational material only. This material is just the personal opinion of the authors, and the client's investment objectives and risk tolerance have not been considered. IronFX is not responsible for any loss arising from any information contained herein. Redistribution of material is strictly prohibited. Okay, so I'm Melanie and I will be your speaker for today's webinar on support and resistance. So here's our agenda for today. Firstly, we'll be looking at using swings for support and resistance levels, followed by looking at where exactly you should place your starting points. And then we'll be going into pullbacks and overlaps and combining these two in order to use these with Fibonacci as well. Okay, let's get started. So firstly, we'll go into how exactly you can use swings for support and resistance levels. So support and resistance levels in trading basically refer to prices at which an asset's price tends to stop falling, which would be your support, or stop rising, which would be your resistance. So to identify these levels, you can use technical analysis tools such as trend lines, moving averages, chart patterns, so on and so forth. Additionally, you can also look at previous highs and lows of the asset, as well as volume data to identify potential levels of support and resistance. So this is basically what we will be focusing on today. And it's important to note that these levels are not absolute and can change over time. So continuous monitoring is necessary. So I've added an image here for you to see how exactly we can use swing highs and lows as resistance and support levels, but we will go through it more in depth in the next few slides. So take note of how there are clear peaks and troughs in the market structure, and these areas can be used as your support and resistance levels. Okay, so firstly, let's look at an example of insignificant swings. So these are bad points to use for Fibonacci starting and ending points, but they're also not exactly good to be used for resistance and support levels. And I've shown you an example here in the GIF. So you can see that the um, price movements are really small and there's no significant swing highs or lows. Here's another example. So once again, there aren't really very clear swing highs or lows, and price movement is very small. Okay, and now let's take a look at a correct example of significant swings. So here you can see that there is a clear move up and down with obvious peaks and troughs and clear market movements basically. So in this GIF, that's basically what you are looking for when you are deciding on a chart to analyze on. So people may ask like which time frame do you use, which time frame do you recommend? And it's completely up to you. It depends on what kind of trader you are. So if you're a scalper, of course, a smaller time frame would be better. And if you are a swing trader, a longer time frame would be better. Okay, but still, when deciding which time frames to use, a important consideration is also the clear market structures. So you want to look for something like this, a clear market structure with significant swing highs and swing lows. Okay. Okay. So support and resistance. You can use these levels as take profit and stop loss levels. But you should not use it as an entry if there are no other supporting arguments, such as Fibonacci or other graphical levels to support your analysis. Using a recent swing high or a recent swing low is typically considered a weak level if it's just that level alone. So you can see in this GIF here, oops, in this GIF here, the recent swing high and lows, although they are significant, so you can see them very clearly, but they are not strong levels to use because we don't have additional Fibonacci levels to support them, and we don't have pullback or overlap support levels or multiple swing high or swing low support levels. So I'll show you what exactly I mean by that. So this is typically what you want to look for. So we're looking for multiple swings. So if at least two swing high or swing low levels line up nicely, these are typically much better levels to use. So you should try to find areas where these might line up, and it does not necessarily have to be at the exact same level because these tend to be areas more so than levels. So in this GIF here, you want to see how far you can, yeah. You want to see how far back your resistance or support line can go, and it's okay to cut through small wicks since support and resistance levels are usually in areas. Okay, so you can see here we have four swing highs that are about the same level, and we want to avoid cutting too many candlesticks. But if you're just cutting the wicks, like in this example here, that's perfectly fine. Okay, so now that we know how to identify significant swings and use them as support and resistance levels, what are some things that we can look out for when inputting a support or resistance level? Okay, firstly, picking a starting point. So when picking the starting point of pivot, which is your entry level, support and resistance levels, these are typically your rules that you can follow. Hmm, excuse me. So firstly, we want to check if there is a swing high or low, and we've gone through those in the previous slides. We also want to look for pullback or overlap levels. So if you are wondering what exactly those are, I'll get into those in the coming slides. Next, we want to go as far back as possible. So as you saw in the previous slide, I did mention we want to try and pull it back as far as possible without intersecting too many bodies of the candlesticks. So we want to avoid cutting the thick part of the candlestick and just the wick. So just the little sticks on top of the candles, those are perfectly fine. Okay, so the orange thumbs over here represent an okay intersection. They're not preferred, but not exactly wrong. But preferably, we want to look for intersections that are only of the wicks, like over here. Okay, some more examples over here. You can see this thumb, this red thumb is what we want to avoid because it's cutting too many bodies of the candlesticks. So these green thumbs are what you typically want to look out for, where you are just cutting the wicks of the candlesticks. Okay, okay. Another example here. Similarly, this red highlighted area, it's not preferred because you're cutting too many bodies of candlesticks. Okay, yeah, so the green thumbs, again, just cutting the wicks of the candlesticks. So something like this, would have multiple swing highs. We can just stop the support, or in this case, resistance. We can stop the resistance level just at this green thumb here. And it would already be considered a pretty significant level because we have three swing highs that line up nicely at the same level. Okay, which is important because you can see that price has tested this level many times before. Okay, next let's go into the pullback and overlap. Let me know in the chat if you guys have are aware of what exactly pullback and overlap level is before I show you guys the next slide. Okay, I think yeah, because I do mention these a couple of times in our previous webinars, but no worries. Let's just go ahead and take a look at these. So firstly, we have pullback. So pullback, from the name suggests, we are expecting price to pull back to a certain level. Okay, so it's basically a strong level of support because it breaks out from a previous resistance level and price is now dropping back to visit it again. So in this case, we're just talking about the pullback support first. So if you take a look at the GIF, this is a pullback resistance. So just ignore that for now. Okay, pullback support is basically the opposite of that, where we are expecting price to retrace back to your support level. Okay, so a pro tip is when a pullback support lines up with a Fibonacci level, it's typically considered to be very powerful. For pullback resistance, these work well when it breaks a significant swing low and then starts pulling back to it. So it's even better, again, if there are multiple Fibonacci levels that are lining up with it. So here in this GIF, we have, okay, ignore the Fibonacci levels first because it is a little bit messy. But if, maybe I'll just refresh it. Okay, so here is our swing low for reference. Okay, so this is our swing low that we are using as a support level for now. But since price has already broken it and it's dropped below the support level, it's then a resistance instead. Okay? It's a resistance because we are expecting price to reverse off of that level. And that's why we call it a pullback resistance because we are expecting price to retrace back to the level and pull back to it. Okay, it is a little bit confusing, so let me know if you guys have any questions. But now if we talk about the Fibonacci levels. So here we are using a Fibonacci retracement. Okay, and I'm circling the 38.2 because it lines up nicely with my retracement. Once again, I have another retracement. In this case, the 61.8 lines up with my resistance, pullback resistance level. Okay, and now you can see that price really pulled back to our resistance and bounced off of it and headed downwards again. Okay. Okay, maybe I'll just let you guys watch the GIF one more time. So price has broken out of the support level, the swing low support, becoming a pullback resistance. Okay, and now that the resistance lines up with not one but two Fibonacci retracements, it's considered a confluence area. That's why I've highlighted it. Okay, and yeah, you can see price reversing off of the level again. Okay, so confluence areas typically are considered quite important levels because you have multiple Fibonacci levels or moving average levels or whatever that line up with your support and resistance. Okay, so those are is basically evidence that price is likely to respect that level again. Okay, so here's an example. Firstly, I have three swing highs that line up nicely. Okay, at this area, this red highlighted area. Price breaks out of the resistance area and it moves upwards. Okay, moves upwards, and once it breaks out of this area, it's considered a not Fibonacci, it's considered a pullback support. Okay, um, basically, when you have a resistance, once price cuts or breaks out of the resistance, it's then the opposite. So then it's a support instead. Okay, so then we call it a pullback support because we're expecting it to pull back or retrace back to the level, as you can see from the dotted arrows here. Okay, another example. In this case, we have a pullback resistance. In the beginning, we have three swing lows that line up nicely. Okay, so swing low, we would think of a support. Now that price has broken out of the support level, it's then a pullback resistance instead. Okay, so the pullback resistance, we're expecting it to retrace back to that level. Okay, another example here. So we have a significant swing low here over the circled area, and thus it is a possible support level. But now that price has pulled back and it has surpassed the swing low support, it is then a pullback resistance. Okay, so now let's see if price pulls back to this resistance level. And you can see that it actually did. Okay, so price has reached the pullback resistance level just as we expected. And once it reaches and reverses off of it, it will then be called a resistance overlap resistance level, which is what I'm going to get into in a little bit. Okay, okay. Next we have the overlap support and resistance. So an overlap support occurs when there are prices that touch the line from the top and from the bottom. So the more times that it reacts off of that area, the stronger the level is. So the reason for this is because it means that there are bulls and bears that are respecting that area, and therefore it's an important point to take note of. Okay, so once again, if your overlap area lines up with other elements such as Fibonacci or graphical elements such as your moving average or pivot points, for example, it will make it even stronger. So in this GIF, an overlap resistance happens when price touches it from the first point, which is over here, and from the bottom, which is here. Basically, when there is a swing low and a swing high that line up nicely in the same area. That's basically what an overlap level is. Whether or not it is a resistance or a support depends on what the latest where the latest point touches the line. So if it touches it from the top, it is a support. If it touches it from the bottom, then it's a resistance. Okay, here's an example. So the swing low support becomes a pullback resistance once price breaks the support at this 105.643 level. Okay, so you can see in this GIF how price retraced or pulled back to this resistance level and in fact reversed off of it, making it now an overlap resistance. Okay, so you can see here the minute that price, okay, here in the original image, price broke out of the swing low support. So once it breaks out of the swing low support level, it is then considered a pullback resistance. And once price retraces that level and reverses off of it, then it is a overlap resistance. Okay. Okay, let's move on. So now we're gonna combine both pullback and overlap levels. Okay. Excuse me. Okay, so here we have a big swing high resistance level. Okay, at the start, and price surpasses this level over here. Okay, so the moment price surpasses this swing high resistance, it now becomes a pullback support instead. Now price has made a pullback to our pullback support and has bounced off of it perfectly. So once price bounces off of it, it then becomes a overlap support instead. Okay, Another example, so we have two swing highs that are lining up. You can see these purple circles here, and we have a swing high resistance from this. So price surpasses this level here, it breaks out of it, and then becomes a pullback support. Number three, point three, price has pulled back to our support and has bounced off of it twice. So the blue circles is where price bounced off of it. So once price bounces off, it now becomes an overlap support. Okay, I think by this time you guys probably have gotten the hang of it. So this is just my last slide, and then we will take a look at some charts. Okay, so once again, combination of pullback and overlap. Firstly, we have a multiple swing low here. Okay, 1, 2 circles here. Point two, pullback resistance. Once price breaks the multiple swing low support, it then becomes a pullback resistance, and then it reverses, pulls back to our resistance, and reverses off of it 3 times here. Okay, so once price breaks out of this overlap resistance, it then becomes a pullback support once again. So every time it crosses the level, it basically switches from a support to a resistance or from a resistance to a support. Okay, and then point five, lastly, price has pulled back to our support and reversed off of it. So this level at the 33420, you can tell that it's a very significant level because price is continually retesting it. Okay, so what's important here is that because it's a pretty significant level, you can also expect Fibonacci levels to line up nicely with this level. Okay. Okay, now let me pull out my trading view and then we can take a look at some charts together. Let me know in the chat if there are any specific charts that you would like to see. Okay. Um, okay, here are my charts. Okay, if there are no specific charts that you guys would like to see, I'll just go ahead and maybe analyze gold first. Okay. Oops. Okay. Okay. So this is an example of a really clear um, price movement. Okay, so we have 3 swing highs here, and you can see really clearly, the peaks here. Okay. Okay. So we have a swing high, multiple swing high resistance here at this level. Okay, and we can see price um reversing off of it. Okay, and this is on our weekly time frame. So we like to look at higher time frames first so that we get an idea of what the general direction of price is on a zoomed out kind of basis, and then we can compare with the lower time frames after. So once again, I'm looking at this on a weekly, daily time frame. Okay, and I can see that we have this decreasing trend line. So I think in our next webinar next week, we will be talking a little bit more about trend lines and trend channels, but I'll just briefly go through what makes um a valid trend line. Okay, so what makes a valid trend line is if there are at least 3 touches on a trend line. And if it is decreasing, your trend line should be drawn, or rather, if it's a downtrend, your trend line should be drawn like this from the top. Okay, if it is a ascending trend line, then we can draw it like this, so from the bottom. Okay, but of course, this trend line is not valid because I don't have 3 touches on it. But this is basically what you are looking for a ascending trend line. Yeah, so sorry about my throat. The weather is getting cooler, so I'm feeling a bit under weather. Okay, so now let's look at the 4-hour time frame. So we typically like to analyze either on the 4 or 1 hour time frames, and how we decide between the two is like I mentioned earlier, by looking at the chart structure, okay, the price structure. So you can see on our 1 hour time frame, it isn't really nice to analyze on. And the reason for that is because price movement is like pretty small. Okay. It's quite small. But if we look at our 4 hour time frame, you can see that we have much clearer price movements. So that's basically what we look for. Okay, so I'm gonna analyze this on our 4 hour time frame. Okay, let's see. We're gonna start off by identifying the trend. So we can all agree that this is a descending trend line, right? Or rather a downtrend. Now I'm gonna see if I can find any graphical analysis to support that. So I kind of have a descending trend line here. Okay. Now that I've done that, the next step is to go in with support and resistance levels. Okay, here is my my second support, second resistance, my first. Okay, I'm gonna see if I can find a closer resistance level. Okay, this level here is my first support. Okay, and then my first resistance, maybe here. And then my second support just here. Okay, so maybe just a recap. So my second resistance, I have a swing high here and a swing low here. So it makes it an overlap level. And then I also have another um swing low here. Okay, so I have bulls here and bears, both of these areas respecting my second resistance. So it's a pretty significant level, and that's why I have labeled that. Okay, and my first resistance, I just have a swing high here. Price has kind of broken out of these levels. Okay, so I only have a swing high level here. Okay, and that's the reason why my next step is to go in with Fibonacci levels to try and support these levels a bit more, or adjust them and see if I have any better levels to use. Okay, first support is because it's the closest swing low to where price is currently at. Okay, and it also respects a couple of swing highs and lows. Okay. Second support, the reason why I put it there is because we have this swing high here and a couple of swing lows here as well. Okay. Yeah, and it's also basically the closest level to my first support. Okay. Now let's go in with our Fibonacci levels. Okay, so here I'm using a Fibonacci projection. Okay, and for Fibonacci projection, we use these three levels, and we use the tool Fib extension. Okay, that's on TradingView. If you're looking at MT4, I think it's also this symbol, but I don't think it's called an extension, but it basically has 3 points for you to analyze. Okay, and for Fibonacci X projection, just to recap, if you weren't here for our Fibonacci series, we look for a flash, okay, a flash or like lightning bolt kind of shape. Okay, something like this. Okay, here, even though you can see my 78.6 lines up nicely with my first resistance, this is no longer valid because price has already broken out of the level. Okay, so I'm just going to keep my 100% here. That lines up with my first support. Okay. Um, mm, okay. Here I can see that this Fibonacci retracement lines up with my 61.8. The 50% is no longer valid because price has already broken out of it. Yeah, so just my 61.8. Okay, and this is a retracement. So for retracement, we use the 5 levels that I was using earlier: 23.6, 30.2, 50%, 17.6, and 61.8. Okay, I think that's all the levels that we have here. Okay, I think that's all the levels we have for Fibonacci. So the next step is to go in um with some indicators, and my favorite indicators to use are the Ichimoku and the MACD. For Ichimoku, I like to just look at the cloud, which is just the plots here. Okay, because if you look at all of the lines, which you can as well, but it is a little bit messy. Okay, so I like to just look at the clouds because at one glance, you can see exactly what the signals are. So if price is moving below the Ichimoku cloud like it is here, price is moving below the Ichimoku cloud, so it is a bearish signal. Okay, so it supports our analysis that price is likely going to continue to drop from the first support down to the second support. Okay, um, but over here, our MACD is giving us a bit of a bullish signal. You can see from the green here. Okay, and the reason for that actually could be because, as I mentioned earlier, our first support is here. Okay, and it's a pretty significant level with the swing highs, the swing lows. So it's an overlap support, and we can expect price to come back and retest this level, which is doing now, as you can see. And on top of that, we also have this 100% Fibonacci projection. Okay, that has not been um it's not been surpassed yet. So we're still seeing price test this level, but because of the downtrend from this descending trend line, we saw on the daily, the weekly timeframes that price is still pretty bearish on those levels, on those timeframes as well. So we can expect price to continue to drop towards the second support because of all the downward pressure. Okay, but for now it is still testing our first support. Maybe we can use another indicator. Okay, let me know in the chat what indicators you guys like to use. Okay, I like to use these three. Okay, on our RSI, we're also seeing a decreasing trend line. So it's also supporting our bearish signal here. Okay, let me know if there are any questions. Oops. Okay, if there are no questions, I think we still have time for one more chart. So if you guys don't have any requests, I'll just go ahead and do maybe the Aussie dollar because we recently saw the RBA releasing a cash rate statement. So let's take a look and see how price affected the charts there. Okay, so same thing, I'm gonna analyze this on a weekly chart. Okay, um, let's see. Yep, we have a descending trend line on our weekly time frame. Okay, next, if we take a look at our daily time frame, also descending trend line here. Okay, remember the three touches here. Okay, next on our 4 hour time frame. So once again, I'm deciding between 4 or 1 hour, but both of these charts seem to be pretty clear. Um, maybe I'll just go ahead and analyze this on a 4 hour time frame. Okay. In this case, I don't really have a descending trend line, I think. Yeah. Let's see. Okay, I don't really have a descending trend line here. Okay, but we can definitely see that the trend is downwards. Okay. Now, I'm gonna go in with my support and resistance levels. Okay, this is my first resistance and my first support, maybe just here. And my second support here. Okay, now we'll go in with some Fibonacci levels again. Hmm. Okay, we don't really have very nice levels here. Okay, my 100% level lines up with my second support. Let me see if my 78 Okay. It lines up, but it's no longer valid because price has already broken out of it. Okay, so just my 100%. Next. Okay, I think my 38 lines up, yep, with my first resistance. Um, okay, my 61.8 also lines up with my second support. Okay, so you can see here I have a confluence lab area here. Okay, so what I am doing here is I have recognized this Nike tick shape. So it's upside down, but this is the shape that I'm looking at. Okay. Um, yeah. So for this, we are using the Fibonacci extension tool. So it's the same retracement tool, but instead I'm looking at the 127.2 and 161.8. And I can see that both of these levels line up with my second support. Okay, and I feel like that's one of the reasons why you can see this reversal of the first support here. Okay. Okay, now let's pull out some indicators to support our analysis. Okay, price is moving below the Ichimoku cloud. So it's giving us bearish signals. MACD is also giving us a bearish signal, so we can expect price to continue to drop because of all the downward pressure. Once again, our indicators are also supporting this. Although we are seeing this rebound off of the first support, as I explained earlier, it's likely because of this 127 and also because of the release of the RBA cash rate. Okay, but yeah, there's a lot of downward pressure, so we can likely expect it to continue to drop towards our second support. Okay, confluence areas also tend to have confluence areas also tend to attract price. So we can expect price to reverse off of it, but we are also expecting price to be attracted to this area. Okay, so areas like our second support, where you have the 100% Fibonacci projection, 61.8% Fibonacci projection, and this huge swing low here. So we can expect price to continue to drop here. Okay, any questions before we go? You have to include the wick in swing high and swing low in putting resistance and support. Um, for Fibonacci, I feel like it's good practice to include it. But for support, swing high and swing low and putting for resistance and support levels, it doesn't really matter because as I mentioned earlier, it's more so levels, areas rather than levels. So you can see here, even though I didn't include the wick here, right? Okay, let me zoom out. But you can see I actually highlighted this area here because of my Fibonacci levels that line up nicely. So for these support and resistance areas, I am expecting them to be areas more than levels. So yeah, it doesn't really matter for support and resistance levels. Okay, I hope that answers your question.